back to Simply BSI, or Simply Budget Save and Invest. Back again with another weekly update that'll contain my portfolio update as well as the option contracts that expired that account for the $330 I received in option income from premiums. I'm also going to go over a shift in my strategy given the market pullback, how how much I'm down in a lot of positions currently, and really just more for my psychology. Gonna try to not look at my brokerage account as much and just focus on contributions for the next, really honestly, for the foreseeable future until we start seeing a bit of a recovery. I'm going to talk about essentially how I'm going to approach my positions currently, the new options positions I opened, and also the time frames. Typically, I was just selling covered calls and cash secured puts about maybe like a week or two from expiration, so 1 or 2 weeks out. But now I think I'm going to do longer term and try to also just swing trade some of them as well. I'll show you kind of what I've been doing with Amazon and how I've been able to swing trade covered calls. But again, you can see here we're at the E-Trade account. The Roth IRA, I've honestly given up on in this account. You can see I hold 100 shares of ETH-A as well as 100 shares of Sound. Sound, I have a cost basis of about like $16, I think, and ETH-A is a cost basis of 28. So it was Roth IRA, honestly, it's going to be sitting there for a while until I get back up to my cost basis there. We can see in some of the alerts, I've started buying this CEPT ticker. It's Cantor. Essentially it's a SPAC. It's a special purpose acquisition company that essentially helps private company, or they're used for private companies to go public. In this case, Securitize is going to use them to go public eventually. So I thought I'd load up on a few shares of that. So Securitize being a tokenization company, essentially backed by BlackRock and a few other big institutions. I am a big believer in tokenization and a big believer that essentially the blockchain infrastructure is going to be needed for real-time settlement. And there's a lot of companies like DTCC, NASDAQ, NYSE making the transitions to accommodate that. So Securitize is definitely something I want to put, want to have some skin in the game there. It's going to be like kind of a set it and forget it position for me. That alongside ETH-A and my rollover IRA. So moving forward, let me actually just focus on the rollover IRA. So again, I've gone over this several times. I've got assigned on a SLV cash secured put last week at the $69 strike. So I'm holding shares there. We can see I sold a covered call that expired worthless. I received about $50 for that. This position I'm going to sit on before I open up another covered call. I just got assigned on a $65 SLV put in my Robinhood account. So as somewhat of a hedge, I'm just going to come Monday open. I'm going to sell a $65 covered call right at open on Monday. Again, receive the premium for that, but essentially it's a hedge. In the event that SLV does close above $65, of course I'll get those shares called away, but I'll still have these shares in my rollover account. That'll, again, obviously if it closes above $65, it'll be closer to my $69 cost basis I have here. So I could sell a $69 call and get a bit more premium than I would otherwise. And then obviously, if it doesn't close above $65, and I'll just collect the premium in my individual account, and I'll just keep rolling that covered call and just keep collecting premium until eventually I do get closer to the $65 cost basis here. The same premise I'm going to use for my ETH-A position. And Robinhood too, honestly. I have Robinhood and ETH-A in both my individual account and obviously here in my rollover account. I'm pretty much going to use them to hedge against each other, where the cost bases are different. So here I have 300 shares at the $14 cost basis. These are shares I prefer to hold long term and I don't want to get called away. So I probably won't sell covered calls on these. I'll probably hold off essentially on selling covered calls on this until ETH-A recovers a bit to the cost basis I have in my individual account, which is around $22. So obviously if, again, no guarantees, but if ETH-A does reach $22, I would be up about almost, I'd say like 70-60% in this position, and then that's where I'll feel a lot more comfortable selling covered calls at that point, probably at like the $23-24 strike. Same thing with Robinhood, where my cost basis in Robinhood is lower here than it is in my individual account. So I'm going to probably hold, I have 200 shares here at $115 strike. Probably going to hold on to these shares until Robinhood recovers a bit. And obviously, not the same for BMNR. I sold a long-term covered call at $35 strike. Again, that strike is above my cost basis of $34. And same deal with Robinhood. I have 200 shares. So 100 shares I'm just holding. Not going to sell anything against it. Actually, disregard. I actually did sell something against it. I did sell a 120 call. This is a March, so 1 year out, a 120. So again, I have 200 shares, both about the $115 cost basis, but they got assigned at different prices. 100 of those shares got assigned at $120 a strike price, so I got 118 there, and then another one was $115, but again, it's $112 because it's just subtracted the premium I received. So I'll be sitting in this account, sitting on these shares for a while. There's no telling how long this bear market's going to last. A lot of analysts, a lot of YouTube personalities think we're still in a bull market potentially, and this is just a minor pullback because of the war. But I think this is honestly a healthy pullback and one that we needed the more I think about it. The market's been super volatile, obviously, but it's also been super bullish, and we've seen exponential returns the past few years, so I think this is a justifiable pullback we're getting. But I'm okay with sitting on these shares. I do have long-term convictions with these positions. I just obviously got the worst entry points and got caught at the top, and I'm okay sitting on these shares for a while. And again, just going to focus on making contributions. So in this account, I'm probably not going to cover because I'm not really going to trade at all in this account anymore. I'm going to focus on Robinhood, where currently, again, I'm going to switch up my strategy a bit here, but with Robinhood, I'm going to focus on long-term covered calls and swing trading those, as well as selling long-term cash secured puts. So you can see I sold a Microsoft $370 put in expiring June 18th. I have a stock screener that tracks, and I think I mentioned this before, RSI, volume, Bollinger Band, as well as the 200 MA. So it's a filter that provides stocks that essentially meet all of that criteria. And Microsoft ended up on that. And in the past, that screener has worked very well for me with cash secured puts. I have yet to be assigned on a contract for a stock that I sold a cash secured put for that ended up on that stock screener. So I'm hopeful that Microsoft will close above 370 by 618. I think we're going to see a sharp recovery, hopefully a V-shaped recovery once this war ends. I'm hopeful that it does end. But yeah, I'm going to keep an eye on that. As I mentioned before, I also got assigned on 100 shares of SLV. We see here the other positions you're well aware of. Just watch some of my old videos. You can see I'm down a ton in these positions, almost 12 grand there. So again, not much going on in this account, and honestly not much to relay. But essentially, I am going to sell SLV covered call come Monday at the $65 strike. Again, $65 where I got assigned. And I just want to show you kind of what I've been doing with Amazon specifically in swing trading, really honestly day trading, long-term covered calls. So again, my theory, or not even a theory, it's fact. This is so long as you sell covered calls at a strike higher than your cost basis, you cannot lose money in the position. So I've been selling covered calls on Amazon at $240 a strike. You can see my cost basis is $238. So if I were to get called away, I'd have to sell my shares at $240, which again is above my cost basis. $2 above my cost basis, so I'd make $200 there, plus whatever I'd make from the premium I collected. So what I've been doing is what I feel comfortable doing is selling covered calls at the 240 strike, knowing again that it's above my cost basis. So what I've been doing recently is day trading covered calls. So we can see here, I've been selling covered calls. These ones all expired, worthless. So collected a bit of premium here, but for these ones, I sold a 240 covered call for $485. Then I bought it back the next day for $390. So what I've been doing is basically selling covered calls on green days and then buying them back on red days. And the market's been so volatile that it's been obviously intraday where I've had opportunities to sell covered calls and buy them back, but also the next day, typically after a green day, I'd be able to buy it back. So again, I sold a covered call for $485, and then I sold it, bought it back for $390. So I collected that difference of $95. Did the same thing with a longer term expiration. So I went all the way out to December. Thought, hey, I do want a little bit more time. Also, just in the off chance that I do catch the top essentially, and Amazon just keeps riding down, I can just ride it till expiration, right? Worst case scenario. Again, Amazon's something I have a long-term conviction in, so I don't mind holding these shares literally forever. So I'm like, I might as well just try to collect some premium while I hold them. So I started selling longer-term covered calls. My plan is to do the same thing on the next green day. I think we're not close to a recovery. I feel like we are months away. I wouldn't be surprised if honestly the rest of the year is somewhat of a bear market, or it just trickles down or trades sideways, whatever it is, while we have extreme volatility. So the next green day, I'm going to sell another covered call at the 240 strike. Again, we can see here, I sold one for $17.60, bought it back for $16.50. So made about $110 here. Did the same thing the next day. So this was sold it on March 25th, bought it back the next day, March 26th. That same day, Amazon, again, that's how volatile it is intraday. So I bought it back at $16.50, right? So Amazon was down. It was red that day in the morning. Later that same day, the contract, I was able to sell it again for $17.70. And then again, the same day, I bought it back for $16.70. So I bought it back to earn $100 here. Then I sold it again once it rode back up to above my original cost basis. And then I sold it again, or bought it back again for almost around the same. I bought it with that same morning. So there was about a $200 swing here, where I earned $200 just from swing trading these contracts. So I think I'm going to start doing that. I did, and this is just a leap I sold, but just trying to look back at some of the activity here. But yeah, essentially, long story short, my strategy is going to change significantly, because I really do think we're going to trade sideways for, honestly, I wouldn't be surprised for the rest of the year. And there really just aren't too many good catalysts. Hopefully I'm wrong. I want to be wrong, but I just want to go into this a bit pessimistic, just for my psyche, honestly. So same deal for my psyche. I'm going to stay away from my E-Trade account. I'm just going to focus on my individual brokerage. Once I'm returned to the cost basis in a lot of these positions, you can see here, Sound, ETH, IBIT, Hood, I'll start selling covered calls again in my E-Trade account. But that's where I stand right now. Just going to focus on generating income by swing trading to some of these covered calls, and also just working and making contributions and deposits to this account as well. So let's go over real quick the specific contracts that expired this week to account for the premium I collected. So we can see here we had the SLV that actually got assigned on. So SLV closed below $65, and I got assigned on 100 shares there. And I also had an NVIDIA cash secured put that expired worthless. I think I actually closed this one out early, which is very good call for me, because I probably would have got assigned, which I wouldn't have been upset about, honestly, but I just want to get out of that position so I could sell the Microsoft put instead. and I received $111 here. So around $230 between these two positions. And then in my traditional account, I sold an SLV covered call, received $40 for that, and I sold two ETH covered calls, received $33 for that. So $60 here, so $100. So again, $100 in option income premium here, $230. So that on my individual account, so that accounts for the $330 total. And again, guys, thank you again for always tuning in. I'm going to try to be more consistent with these. Last week, for whatever reason, my laptop or YouTube would not let me post the video that I recorded, and I just kind of gave up on it. I don't know. Hopefully this one does let me post, but again, thank you guys as always for tuning in. Comment, like, subscribe, and good luck out there.